an example sometimes is the pastor may take some folks out for lunch. Maybe the pastor takes the staff out for lunch and they have a planning meeting, or maybe he takes a member out for lunch because they need some counseling, or a prospective member. I mean, there's just all sorts of reasons that there are business expenses that the ministers incur or any of the staff members might incur. And it's only right and fair that the church reimburse them for that. I have employees, and anytime I ask my employees to go and do something for my business, I feel it's only fair that I reimburse them. I mean, if I send them to the store and say, you need to buy this for the firm, when they get back, they're expecting me to reimburse them, and I think that's only fair. And a reimbursement is totally tax-free. So if I send James to the store, James, we need a box of copy paper. Will you run down to the store and get that for us? He says, sure. He runs down there. He picks it up. He didn't have the company card on him, so he used his personal card. He comes back with a receipt for $30. I mean, I need to reimburse him that $30 for buying the copy paper for the firm. In fact, he drove his personal vehicle, to perform a company errands, so I should reimburse him for the mileage that he put on his personal vehicle. And there's a standard mileage rate to do that. In fact, it's in your printed material there. It's 53.5 cents per mile. So, to me, it's pretty straightforward. If an employee, minister or otherwise, spends money out of their pocket to conduct church business, then we should reimburse them for that, and it is completely tax-free. Now, one of the keys, though, is that they have to document it. So if James comes back and says, Jerry, the box of paper was $130. I'm like, I'm not buying that. I want to see the receipt. So the receipt has to be turned in, okay, to document the reimbursement. And if the church were to get audited and they say, well, I see you've been reimbursing these employees for these business expenses, and it's a tax-free transaction, where are the receipts? You say, well, I don't have any receipts. He just said he spent $100 on a meal. Then that doesn't work. So the documentation has to be turned in for the church to issue the reimbursement check. And a big one is mileage. Our ministers, they go and see people, whether they go to the hospital, they go on visits, they carry some kids to youth camp in their personal vehicle. I mean, it's a big deal. Putting a lot of miles on the car performing church business. So we should be reimbursing them for those miles. Another example is books. The minister may want a certain book to put in the library to use for sermon preparation or something like that. All of those things we should reimburse them for. On page 8, you get down to that question that says, should employees be given an auto allowance? And the answer is probably not. So I really don't like auto allowances at all. And I know they're pretty popular, so this is one of these areas that gets kind of contentious. Remember, to reimburse an employee and it be tax-free, there has to be documentation. So when I see a church paying a minister an auto allowance, I'm very suspicious if there's any documentation or not. So for example, let's say, we know the pastor drives a lot, so let's pay him $300 a month auto allowance. At the end of the year, we're not going to put that $300 a month on his W-2 or anything else. That's going to be tax-free to the minister. And the church gets audited, and they say, well, we see that you paid the minister $3,600. You didn't put it on his W-2. You didn't call it taxable. Why? Oh, that was auto allowance. Well, did the pastor turn in a mileage log justifying that $3,600 using the standard mileage rate? Nope. Well, then that's taxable income. You need to redo the W-2. Because if the documentation to back up the reimbursement is not in the files, then it's taxable income. And so I feel like most auto allowances, the ministers are not turning in any documentation to back it up. So that would be taxable income, which kind of goes back to, remember the comment about we want to pay the pastor's Social Security tax. Can we do that? Of course, you can pay us. You can pay anything you want for the pastor as long as you put it in box 1 and call it taxable income. And that's not what he wants. They don't want They don't want it box one taxable income. They want stuff paid for that's not box one taxable income. But you have to have documentation to back that up. So instead of giving your employees an auto allowance, I say you reimburse them at the federal standard mileage rate, which for 2016 was 54 cents a mile. For 2017 is 53.5 cents per mile. Now, you may also want to give them a budget. So you may say, well, okay, we want to comply with the law, so the documentation is a requirement. The pastor is going to have to turn in a mileage log, and we'll reimburse him 53.5 cents per mile. But what if we can't control the guy, and he winds up driving 50,000 miles this year? He's just visiting everybody on the earth, you know? 50,000 miles times 53 cents per mile, we really didn't want to pay him $27,000 worth of mileage reimbursement. So you can put a limit on it. You can put a budget on it and say, minister, we're going to pay you 53.5 cents per mile for your church-related driving, you know, going to visit people in the hospital and such. But we're going to limit it to $3,000 a year. And if you hit that $3,000 limit in March, sorry, but you've hit the limit, and that's all we're reimbursing. If you hit it in December, okay, sorry, but that's all we're reimbursing. What if you don't hit the limit at all? Okay, that's fine. You save the church some money. You know, we allocated $3,000 in the budget to reimburse you for mileage, and you turned in your mileage logs and it only came up to $2,800. The church has $200 more than it thought it was going to have. It gets to keep that money. Well, then the pastor says, well, I want that money to come to me. Y'all promised me that money. Well, you could up the pastor's Christmas bonus by $200 and probably get to the same place. But again, Christmas bonus goes in box one of the W-2. Because for it to not be taxable, there has to be some justification behind it. All right. Any questions about reimbursing for these business expenses? The meals, the mileage, the books, the conferences. Most churches put limits on it, and I'm fine with that, but you've got to turn in the receipts to get reimbursed tax-free.
What about cell phone?
Yeah, I agree. We could get reimbursed for cell phone. I have no problem with that whatsoever, as long as it's a reasonable amount. So let's say the total bill for the month is $100 a month. I don't feel like the church should reimburse $100 a month, because I suspect the pastor uses the phone to make some personal phone calls too. So it needs to be a reasonable amount. Say, well, a bill's $100 a month, and probably 50% of the time I'm doing church business, then I'd be perfectly fine with reimbursing $50 a month. Now, you should still turn in some sort of a receipt, the statement or something, because again, if there's no receipts in the file, we can't do it. We have to have receipts in the file. But you can turn in the receipt and say, I know this bill shows $100, but I'm only asking for $50 because the other 50% was personal use. All right, now we're moving on to a topic, page 9. What types of employee benefits can the church provide? Employee benefits can the church provide to employees? And this is maybe the most difficult topic of all. So fasten your seatbelts. This is a hard one. So the first thing I'm going to say is this topic really is not church specific. So all the rules I'm going to cover basically apply to any employer. So if you own a business, you could use these same rules. They still apply to you. So here we go. The first one I want to talk about is health insurance, because that's a big one. Obviously, health insurance can be costly. It's just a super hot topic these days. The Affordable Care Act, or Obamacare, wants us to buy health insurance. You know, on individuals, there's a penalty if you don't have health insurance. And to encourage that, they want employers to provide health insurance to their employees. In fact, if you have more than 50 employees, you must provide health insurance coverage for your employees. Most of our churches have less than 50 employees, so we're not required to offer health insurance to our employees. But a lot of ministers, they're going to need health insurance from some form, so a lot of times they want to try to get it through the church, and that's fine, but we have some very detailed rules we must abide by. And so we're going to dig into those detailed rules. The first thing I'd say is Obamacare wants all employers to offer a group policy, a group health insurance offering. So my wife works for a large medical group. They obviously have a large group plan. We participate in that plan, and I love it. It's a big group plan, reasonable rates. But a lot of ministers say, I can't join a big group plan. I got to go out and buy an individual policy. And that's where we're going to dig right into those details, because this is where the rub comes down. If the church has more than one employee, so let's say you have a pastor and a youth minister, or a pastor and a secretary, or you got 3 employees. If you have more than one employee, you're eligible to go get a group health insurance plan, and that is what the Affordable Care Act wants you to do. They want you to go get a group plan. Whether you get that from your local agent, whether you get that through the Obamacare Exchange. The Obamacare Exchange has its own separate little section for group plans. It's called the SHOP. You can go there and get a group plan for your church. You can get group plans, this is probably the best place to get it, through Guidestone. They offer group plans. Okay, so if you have a group plan, then I probably only have maybe one rule that you need to be aware of, and that is you're not supposed to discriminate amongst your employees. So let's say you have 3 full-time employees, and you're going to go get a group plan through Guidestone. You have the pastor, the music minister, and the secretary. And you plan on paying the health insurance of the pastor and music minister, but you don't plan on paying the health insurance of the secretary. You're not supposed to do that. That's called discrimination. It's not racial or any other type. It is employee discrimination. So you're not supposed to discriminate. If you're going to get a group health plan, you're supposed to offer it to everybody. But as of today, that law is not being enforced. Even to the extent the IRS says we are not enforcing that law. I don't know really what the holdup is. I guess they're busy on other topics and they're trying to figure out how to implement it, how to enforce it, how to write the rules. So it's just, the IRS publicly says you could discriminate today and you're not going to get in trouble because even though it's against the law, we're not enforcing it. But I'm telling you, there could be any day now where they come out and say, well, effective today, we're going to start enforcing that law. But effective yesterday, they hadn't started enforcing it yet. So that's really the only thing I want to make you aware of is you're not supposed to discriminate. So the solution there is just to offer it to everybody, and maybe you pay the employee's portion, and if they want to have family coverage, they have to pay the family coverage out of their earnings or something. That would be fine. But what about, and this is where the real problem comes in, you know, the pastor says, I don't want to go through Guidestone, we're not getting a group plan, I'm getting my own individual policy. You know, because my doctor is on this policy over here, it's an individual policy, this is the policy I want, that's the one I'm going to go get. In the old days, that was acceptable. The church could pay that tax-free, no big deal. With Obamacare, that is not acceptable. There's a $100 per day penalty for an employer to pay for the individual health insurance policy of an employee. And you heard me right, $100 per day times 365 days a year, that's a penalty of $36,500 per year if an employer pays for an individual health insurance policy of an employee. Now that's the rule, it's written into Obamacare, and that one they say they are enforcing. I haven't seen anybody been hit with it yet, but it scares the dickens out of me. I mean, that's a lot of money. There are a couple of exceptions. Number one, if you only have one employee. So if we have a really small church and we have one paid person can't form a group because a group has to have 2 people in the group. So there's an exception. If you only have one employee total, I'm not saying you only have one employee who wants health insurance, I'm saying you only have one employee total. You only have one employee total, then you can pay for the individual health insurance policy for that person and you're not going to get hit with the $100 per day penalty. Up until December, 6 weeks ago, that was the only exception. But now there's a new set of rules that was signed into law on December 13th. So, I mean, this is hot off the presses, breaking news here. And that's where I spend a lot of time on page 9 talking about that. In the middle of page 9, you can see the acronym in there, the QSEHRA. Now, we need to figure out how to pronounce that. The QSEHRA, and we'll go with that, the QSEHRA, which is a Qualified Small Employer Health Reimbursement Arrangement. So a lot of people were out here griping to Congress saying, y'all are killing us. You tell us we got to get health insurance, and I want to buy that policy, and I want my employer to help me pay for that policy, but you say there's a $100 per day penalty if we do that. This is wrong. And apparently Congress listened, and so there was a law passed in December, which the law was really intended to deal with the opioid crisis, but they stuck a tax provision in it. So I didn't read the opioid part of the law, but I did read the tax part, the same law, and it creates this QSEHRA, this Qualified Small Employer Health Reimbursement Arrangement. And so I've got the list of requirements in there because I think this is important. I mean, assuming you don't have one employee, you have more than one, and you don't have 50, and you're not going to do a group plan, you need to know this right here. This QSERA is a big, big deal. Let's go through the requirements. You must have less than 50 employees. I bet you do. You must not offer a group plan. Okay, for some reason you've decided you didn't want to go the group route, you wanted to go the individual health insurance route. Okay, you're in this list, you're doing good. The employer must offer the HRA to all full-time employees who are over age 25 and who have worked for the employer more than 90 days. Now that may be the kicker. You may say, oh my gosh, we're going to have to offer it to, we got 7 employees and we got to offer this to all 7. Well, if they're over age 25, they work for you for more than 90 days, the answer is yes. So that may be the hurdle you have to swallow right there.
So it says full-time.
It does.
So if they're working less than 40 hours.
I think full-time is 30 or 32, and I'm sorry, I don't know between those two, but it's 30 or 32 is full-time. 30 hours.
Okay, yeah. And so we have a secretary that works right around that number.
So we got to figure that out, don't we? Yeah, it's 30 or 32, yeah. Let's say she works 20, she's part-time, she's not included.
Okay.
We got to figure out whether it's 30 or 32, figure out how many hours she's working. If they're part-time, you can exclude them. Yep. And the only problem you'll run into is if you start doing it for some part-time, you've got to do it for all part-time. Because you can't discriminate.
Right.
If you start doing it for some part-time, you've got to do it for all part-time. But you can not do it for any part-time and you're fine, only do it for all your full-time. The funds may be used to pay for medical expenses and health insurance premiums. So you're going to set aside some money, and it gives us the limits here in just a minute. And you're going to say, all right, employee, we've set aside this much money for you. You can go get an individual health insurance policy. You turn in the receipts for your health insurance premium. You get the money out of this fund tax-free. That's a good deal. But we allocated $49.50 for you. Your health insurance is only $4,000. You've got $950 left in this account. You can turn in some medical bills, some prescriptions. You can turn in $950 of other receipts and get reimbursed out of this account too, tax-free. So this is a really good deal. And it applies to not just churches, small businesses as well. The employee must provide proof of minimum essential health insurance coverage to the employer. So for this plan to work, the employee actually does have to go get a policy. So I know what some employees are going to do, like, hey, y'all are setting aside $49.50 for me, and I probably won't even spend all that. I'm not even going to bother going to get a health insurance policy. No, for this plan to work, the employee has to go get a minimum coverage, one of those Obamacare. Doesn't have to be an Obamacare policy. I mean, they could buy the policy at their local agent, but it has to meet the minimum qualifications to pass the Obamacare test. All right. The HRA is funded solely by the employer and cannot receive salary reduction contributions. So that's a hard one. What that means is you're not deducting it from their paycheck. So when you work for a large company, my wife works for a large company, and there's deductions on her paycheck. They hold out, they're paying her insurance, but they're not paying the family coverage. The family coverage part of the health insurance is withheld from her paycheck. They hold out for dental insurance, they hold out all these things. This HRA cannot be done as a payroll deduction like that. It has to be from the church's budget, not from the employee's pay. This is where it could get a little tricky. So on our church secretary, which we were planning on paying $2,000 a month, and she goes over the 32 hours, and now she's full-time, now we have to set aside $49.50 for her health insurance, and we can't take it from her pay. Now, I think we could go to her before the beginning of the year and say, times are tough, you're taking a pay cut. But we are going to give you $49.50 in health reimbursement arrangement, but you're taking a pay cut. You can't subtract it from their paycheck, but can you renegotiate somebody's pay? It's kind of semantics, isn't it? I think you can renegotiate somebody's pay, but you cannot deduct it from their paycheck. Probably a little bit easier with the pastor. The pastor's like, I need health insurance, and if I can get it tax-free, what do we got to do? Well, we can call this housing, we call this salary, and y'all are gonna put $49.50 into my HRA, okay, we're good, you know, but it could get a little hairy there, right, with working this out with your employees. Because it cannot be deducted from their paycheck, it has to be paid from the church's budget, general fund, whatever you wanna call it. But if you renegotiate their pay, then you kind of probably work around that.
I have a question.
Yes.
So on that 4950, let's say you don't use it all, you say you can use it for other medical expenses, so if you go to the emergency room,
Yeah.
and you get the bill in the mail, can you use that, can you pay, what am I trying to say? Can you use that 4950 for that emergency room bill?
Yes.
Okay.
Yep. Yeah, this $49.50 that's in your HRA can be used to pay your health insurance premiums or any other qualified medical bill. That would be dentist, eye doctor, chiropractor, prescriptions, emergency room, regular doctor, all of that stuff. The plan has to be offered on the same terms to all eligible employees. So you can't go over $49.50 per an individual or $10,000 for a family. And you can't do it different for different employees. Well, for the secretary, we're giving $2,000 into your HRA, and for the other folks, we're doing $49.50. You pick your figure, you pick your single figure, and you pick your family figure. And those are your figures you're using for all employees. Notice of the plan must be provided at least 90 days before the beginning of the year. So you have to tell the employees in advance of the year that you're going to start this plan. Now, when I first read that, I said, oh my gosh, 90 days before January 1st of 2017 would have been September 30th, 2016. We can't use it for this year. But heck, the president didn't even sign it till December, so how could we have done it on September when he didn't sign it till December? And the answer is they made a provision for that. They said this first year, you have until March the 13th of this year right here to implement it. So it's not too late to implement this right now for your churches. And so you may have been out of compliance last year. You may have paid the pastor's personal health insurance policy, and you may have had more than one employee, then you were out of compliance. But you could get it in compliance pretty easy just by setting up this structure right here, this QSERA thing. And it really, if you follow those bullet points, I don't think it's overly complicated. You just got to follow every bullet point.
When you say more than one employee, like last year, we're talking full-time?
Yes,
Okay.
that's correct.
What if you have an employee or say pastor who is already insured through another retirement? Would that?
Then there's really nothing you can do because they're, well, I'll say this. Is the pastor writing a check to pay for that health insurance?
No,
It's deducted from a pension or something.
no, it's not for his personal,
Yeah, it's Medicare or,
he pays for mine.
yeah, and it's withheld from a pension check. You know what? I think that would work. I mean, I think it would meet all the bullet points.
But he would still have to be covered under this act, under another insurance.
Now, under the family provision, I think you could
If I would,
I think you could turn in the monthly statement that shows the amount that was deducted from his retirement and include it.
so if you have a church with 2 employees that's being paid full time and he's covered, then you wouldn't have to necessarily offer insurance to that other employee.
So,
It could come up.
yeah. So you have one employee who's probably going to need to use it, and one employee who's not going to need to use it. Okay? The employee who doesn't need to use it doesn't have to use it. So you have to offer it, but they don't have to use it.
Okay, so it has to be offered.
Right.
It has to be offered, but you don't have to accept.
Okay.
That's right.
Okay, my question would be then, what if the pastor, he gets it through, for the family side of it, gets it through his wife's job, but
Yeah.
but their wife is paying the family side of it?
Yes.
Could he do that?
No, and the answer is because through your wife's job, it's already pre-tax.
That's correct.
It's withheld from her paycheck on a pre-tax basis. So you can't get pre-tax money to get reimbursed for something that was already paid for with pre-tax money.
Okay. But then with their private insurance,
You could do that.
write a check,
right?
does that? still-
Family coverage, I think it's fine,
Okay.
yeah. As long as you meet the other
Right.
offer to all the full-time
Right.
employees and all of that, yeah.
Okay.
I think so. Now, I'll tell you, this is brand spanking new. I
Right.
mean, we're talking very, very, Guidestone has nothing on their website yet about this. And that's a little surprising, because you can normally count on Guidestone, you know, give you good advice. There, it will be. I mean, I'm sure they're up there typing yesterday. I mean, within a few days, but this is, you know, they passed it 12 days before Christmas, and nobody works over Christmas. They just haven't issued it yet.
Apparently you did.
Yeah, a little bit. Okay. Let's move on here. I want to talk about life insurance. I'm on the bottom of page 10 now. This may be an area of non-compliance. An employer can provide up to $50,000 of group term life insurance coverage. And that's it, tax-free. So, let's say I have a personal $100,000 life insurance and I want the church to pay for it. Can't do it. Can't do it tax-free. Group term life, $50,000 tax-free, that's it. Can't be more than $50,000, can't be individual, has to be group. Group term life, $50,000 tax-free, that's it. Now, some large companies, Lockheed Martin, big defense contractor out of Fort Worth, they offer more than $100,000 of group term life. The excess is taxable to the employee. So the employee's pay, or W-2, has a figure added onto the W-2 to represent the value of the excess group term life coverage. Pretty doggone complicated. So I would just say this, either don't pay their life insurance or go to Guidestone and get $50,000 group term life. The other thing on page 10 I want to talk about is retirement plans. Probably the best idea is to go through Guidestone and offer a 403B. 403B is kind of like a 401k for nonprofits. You know, it's got an $18,000 limit. It's going to be mutual funds. It's fine. And it's perfectly legal. Here's what you can't do. The church cannot contribute to a minister's personal IRA on a tax-free basis. And I had a call on this last week. You know, somebody was pretty sure they could, and I know you can't, so I had to help them understand that you can. Now, I'm not saying a minister can't contribute to an IRA. Obviously, a minister can contribute to an IRA. And depending upon their circumstances, they might be able to deduct it. Of course, that's none of our business as the church. I mean, they do their own 1040, and we don't require employees to turn in their 1040s, and whatever they put on their 1040 is none of our business as the church, right? So, the minister may contribute to an IRA, and depending on his circumstance, he may get to deduct it on his 1040, but the church can't put money into that IRA and exclude it from his W-2. So in this situation, the church had already done it. They had already sent money from the church's bank account into this fellow's IRA account. I said, you got to put that in box 1 of the W-2, as if it was wages. So remember, I can pay the minister's self-employment tax, but I got to put it in box 1. I can pay them a Christmas bonus, and I got to put it in box 1. I can pay them because they're handsome, but I got to put it in box 1. I can put money in their IRA, but I got to put it in box 1. Because if I'm giving them money, I got to have a legal reason to not put it in box 1. And you can't put money into their personal IRA and not put it in box 1 as taxable wages. 403B, different story. 403B is like 401k, it's tax-free. You know, our pastor, we put quite a bit into his 403B. And it does not show up in his box 1. He's not paying income tax on it. When he takes the money out of his 403B, you know, he'll have to deal with that on his taxes in that future year. But for now, all that money is completely tax deferred. Okay. I think we finished that section. Anybody have any question about employee benefits? All right, now we're going to move to page 11. I'm going to try to speed up the process a little bit. Page 11 is talking about how to structure a minister's compensation package. And I'll just give you some steps there. In step 1, we figured out what the total package was going to be. It was $40,000. Then in step 2, we determined how much of the package could be tax-free. So remember, we might set a budget of $3,000 that we're going to reimburse the minister for mileage. As long as he turns in his mileage log, that $3,000 is tax-free. we might put $4,000 into the minister's retirement plan, the 403B. It don't have to be at Guidestone. There's other companies that offer 403Bs. But for church, for it to be tax deferred, it really does need to be a 403B. You could do a 401k, but most 401ks are more expensive to set up. Number 3, the health insurance premiums. You know, if we have the group health insurance coverage, then we can pay for their health insurance tax-free. Or if we do this new QSERA thing, we can pay for their individual policies health-free as long as we follow all the rules of the QSERA. Tuition paid for the minister's education. Now, so we have a lot of ministers who are still going to seminary, right? And this can fall into a couple of different categories. Number 1, if they're attending classes that improve their skill and their present position, then we can just pay for it. So if they're our preacher, we say, we want you to take preaching classes and we're going to pay for them, that can be tax-free because that should improve the skills that they currently have. But what I can't pay for tax-free is for them to get a new skill. So they're our pastor, but they're studying law because eventually they want to be a lawyer. We can't pay for their law school tuition tax-free because that's not improving their skills in their current position. That's qualifying them for a new career. There is a separate provision in the law called Education Assistance Program, and that does allow you to pay up to $49.50 if somebody's tuition tax-free, regardless of what they're taking. So there's 2 different things. What we're talking about here is reimbursing tuition if it's related to their job. Then there's that second EAP, Educational Assistance Program, off on the side. We can reimburse them for their business expenses. Let's say we give them a $1,000 budget that they're going to turn in their expenses and get reimbursed for business travel and so forth. Books and research and communications. So we're going to subtract all the tax-free items first. That's going to bring the taxable income down. Next, we're going to do the housing allowance because they don't owe income tax on their housing allowance. And then whatever's left over is their salary. And that's what's going to have to go in box 1 of their W-2, and they're going to pay tax on it. So you see, we kind of work backwards. We start with the package, we subtract all the tax-free items, we subtract the housing allowance, and whatever's left over is going to be their taxable income that's going to be reported in box 1. That's my recommendation about how to structure a minister's compensation package. Any questions on that?
Does the salary need to be a certain percentage?
Does not.
Okay.
There's no rule or law about that. So, you know, my little church, we don't pay the youth minister very much. Actually, I'm volunteer youth minister right now. But we're looking at getting a new youth minister, and we don't pay them very much. I'm pretty sure the youth minister will be able to designate 100% of his salary as housing. We don't pay him very much, and his house payment's probably bigger than what we pay. Then 100% can be designated as housing.
If you as a preacher do continuing education on your own, you can deduct all that, right?
Well, you can deduct it or get reimbursed. It would be better to get reimbursed to be totally tax-free. If you deduct it on your personal return and you're an employee of the church, then it would go on Schedule A as a miscellaneous itemized deduction, and those things don't hardly help you any. So my recommendation is to get reimbursed. Even if you have to lower your pay at the church. So if you think every year I wind up spending $1,000 on conferences and training, okay, that's great, and the church pays me $20, how about I get my salary lowered to $19 and just ask them to reimburse me for that $1,000 worth of expenses that I incur every year? You'll come out ahead for taxes. Because deducting those things on Schedule A as a miscellaneous itemized deduction probably doesn't wind up saving you hardly any tax at all. We have a lot of clients who give us miscellaneous itemized deductions, and we put them on their Schedule A in the right place, and probably 75% of the time they don't save them any tax. There's limitations on, it's got to exceed 2% of your income, and that's only if you itemize, you know. But it'd be better to get reimbursed because then we know it's coming right off the top. Guaranteed savings that way. So let's move on. The next section is payroll taxes. And here's what I'm going to do. It's in the book. I'm going to leave it for you to read. And for your church secretaries, your financial secretaries, this could be a meaningful section for them. I know mainly we're talking to pastors today. So, and the pastors aren't doing the payroll tax reports anyway. but the information is in there for you. Here's the short and sweet. On our regular employees, we're paying Social Security and Medicare. We're withholding half your Social Security and Medicare, and the church is paying the other half, and the church is withholding income tax. So on our regular employees, we're treating them just like they're employees of Walmart. On our ministers, we're not holding out anything unless they voluntarily elected to have income tax withheld. And then we put that on the 941 at the end of the quarter. And so all of that information is outlined for you in 12. Even through page 15 talks about the payroll tax forms. Page 16 gives you line-by-line instructions for Form 941. Page 17 talks about filling out the W-2s, W-3. At the bottom of page 17, we need to talk about this. So if you will turn to page 17, down at the bottom. 1099s. You know, we're going to give W-2s to our employees and tell them how much they've made, and we're going to send a copy of that W-2 to the government. In fact, they changed the law this year. Used to, you could send your W-2s to the government at the end of February. So you send them to the employees at the end of January, and then you could send, you know, the copy to the government at the end of February. Law change. Everything goes in January now. So you do your W-2s in January, you send them to the employees in January, you send them to the government in January. So I guess the government felt like they needed them sooner. So it's not good that they keep moving up due dates on us, but. So we're on page 17, down at the bottom, what are forms 1099 and 1096? You have to send a 1099 to any contractor that you pay more than $600 during the year that is not incorporated. So let's talk about that. The plumber comes out and fixes the plumbing, and we pay him $650. We're going to send the plumber a 1099, unless the plumber fills out a W-9 form and check marks the box that says he's incorporated. Because you don't send 1099s to corporations. You do send 1099s to LLCs. So you can't just say, well, it says Joe Plumber LLC, don't even worry about the W-9, we're not going to send him a 1099. That's not true. You do send 1099s to LLCs. So you need all of your contractors to fill out W-9s. So let me start there. You need all of your contractors to fill out W-9s. So when the plumber shows up, and you're like, this thing is, the plumbing's terrible here. But it's over $600, you need to fill out a W-9. I'm not even going to write you a check until you fill out this W-9. You get them to fill out the W-9, they're going to give you their name, their social security number, their address, so at the end of the year you've got that information to send them their 1099. We hire a custodial company. Now we talked earlier, if the guy shows up every day and works every day, he's probably an employee. But if we have one of those custodial services that comes in, we're going to send them a 1099 if we pay them more than $600 this year. We needed some gravel in the parking lot. I got two scenarios for you. So we called the company and they dropped off 4 loads of gravel back there, charged us $1,200 for the gravel, drove off. Do we give them a 1099? And the answer is no, because they didn't do any work. All they did was sell us product. They just sold us product. No 1099s get issued for product. 1099s get issued for work. Let's change the scenario. They delivered the gravel, plus they had a tractor, and they spread the gravel, and they charged us $2,000. We know the $1,200 was for the gravel. We know the $800 was for the spreading of the gravel. Do we issue them a 1099? The answer is yes, for $2,000. So because there was labor involved, we have to issue them a 1099. But the 1099 is for both parts, the sale of the product and the delivery, and the spreading. On their tax return, they'll deduct the cost of the gravel. Don't worry about that. That's their problem. You're going to 1099 them for $2,000 because you paid them more than $600. They were not incorporated, and there was some labor involved. If you hire an attorney, you have to issue a 1099 to attorney regardless of how much you pay them and regardless of whether they're incorporated. The government feels like attorneys don't pay their taxes, so they're really on top of attorneys. So always get a W-9. The revival minister, the revival music team, and 99s. Any questions about 1099s? Non-compliance is a $100 penalty per 1099. Okay, let's move on to Page 19, tax exempt status in churches. I think you'll like this. We've got pretty good news on this page. Do churches need to file for tax exempt status with the IRS? The answer is no, they don't have to. It's just built into the tax code that churches are automatically exempt under section 501c3. Now you hear that phrase quite a bit, 501c3. Are we a 501c3? I wish we were a 501c3. I know if you're a 501c3, you get all these special things. Here's the deal. If you're a church, you are exempt under 501c3. You don't have to do anything except be a church. If you're holding religious worship services, you could be holding them in a garage. I mean, you could be a church in a garage, right? I mean, you put some chairs in the garage and you have Bible study. You do it consistently. You get a little doctrine together. You've got you a church, and you're exempt under 501c3 right then. So, you know, things are going bad in this country, and they're coming after the churches and the Christians. But there's a few little things that are still decent, and that is, churches don't have to apply for 501c3. They're automatic. As long as you're a church, you are 501c3. Now, other nonprofits have to apply to be 501c3 exempt. So if you start a food pantry, not at your church, I mean, you know, you and your friend just rent a building down the street, and you're not a church, you're not related to a church, it's just you and your friend starting a food pantry ministry. You're going to need to apply for 501c3 because you're not a church. Now, if it was the church starting it, you know, that's covered underneath the church, that's not a problem. But if you start a ministry or an organization that's charitable or religious, but it's not a church, and is not underneath the church, then you're going to need to apply for 501c3. But churches do not have to apply on their own. Can you apply for 501c3 if you're a church? You absolutely can. And you'll get approved really fast because they don't care. They're like, you didn't even have to send that in. You were approved already. So if you can send in your application with a bulletin and a budget and maybe some minutes and say, see, we're a church, and maybe you have your website, it looks like a church website, they're going to approve you like that because they're not trying to deny churches their exemptions. And there might be a small advantage to going ahead and applying. It seems like, you know, a lot of places we turn, we get asked, well, we bought a church van recently. And the dealership said, show us your 501c3. And I had to say, well, we're a church, so we don't have a 501c3 letter, but we're automatically exempt under 501c3. And after a little bit of going back and forth with them, they finally agreed and understood. I wish I didn't have to argue with them. It was kind of a waste of 10 minutes of my life, you know. So there are some advantages of going ahead and filing for the 501c3. That way you get a letter from the IRS that says you're 501c3, and then I wouldn't have to argue with the lady. I could just send her the letter. So there are advantages, but you're not required to do it. The disadvantage is the cost. I think if you're under 50,000 in gross receipts, I think it's a $450 fee. If you're over 50,000 in gross receipts, like an $850 fee. So, you know, it's probably not worth the $850 to go ahead and file it. I probably should just have to argue with the lady, I guess. I don't know. But you got to weigh that out, you know, do we want to file it or not? In hindsight, I've been asked that question so many times, maybe I should donate the $850 and we should go ahead and do it, because I've had to fight that battle several occasions. And it's not necessary, but there you go. Do you have to file annual income tax returns? Well, the pastor does as an individual. All the members do as individuals, but the church itself does not file a Form 1040 or any type of income tax return for the church. Churches are exempt from those requirements. Now, other nonprofits do have to file a Form 990. So if you and your friend start the food pantry ministry that's not underneath the church, it's just you and your friend, you know, filed, you got your 501c3 approval letter, you will have to file a Form 990, but the church does not.
What about like a church association?
An association of churches is exempt, and in fact, even educational schools are exempt. So,
No 990 involved in that.
right, no 990 for an association, and let me go back to the schools. I didn't phrase that right. I need to correct my phrasing. A church-affiliated school. So if my church starts a school, my school doesn't have to file a 990. I can go start a religious school that is not underneath the church, and then I would file a 990. But if
What
I'm
about if the church has a for-profit daycare?
Well, that's a good question. Here's how I'm going to answer it. I still don't think it's for-profit. Because the goal is not to make a profit, I would say. The goal is ministry.
Right.
So therefore, it's underneath the church and you don't have to file a 990. It could get to a fine line there, but I'm gonna say, I mean, you're probably teaching Christian literature to the kids in the daycare, so it is ministry, no 990. But if there are situations where churches would file a 990, and that is if they started a venture that was simply for profit. I mean, they opened a tire store. And you say, why are you doing that? To make money. Okay, then you file a 990T. A 990T is a taxable form. So it is conceivable that churches would pay income tax, but only if they have a venture that is for profit and not part of the ministry. And an example was this, and so you need to know this actually. Renting out facilities. If there is debt on the facility, then that falls under that taxable category. And I think there's a de minimis amount, and I can't remember what it is, 10 or 15,000, but if you're over the de minimis amount, let's say it's 15, so if you collect 16,000 a year renting out a facility that has debt on the facility, that you're supposed to file a 990T. That's a taxable for-profit venture. What's funny is if there's no debt on the facility, then it's exempt. So if you're going to rent out a facility, make sure you rent out the one that has no debt on it, or collect less than the 15,000 de minimis. So that's an interesting rule. But here's where I read an article one time where it hit a church. It was in New York City, and they had a parking lot. Think about New York City, parking is a premium, so they rented out their parking lot for some enormous sum of money, and they had used the parking lot as collateral for a debt, so they met all the tests, and they had to pay income tax on their profit from renting out the parking lot. So, but if they'd owned parking lot free and clear with no debt, there's a little exemption, says they don't have to pay tax on that.
What if a church rents their parking out?
If there's debt on it, then it is. If there's no debt on it, then we're good. Yes, sir. Yep. So you probably want to fix it so there's no debt on the parsonage. Even if,
I know there was a description when we first moved to Vegas, we were in another church's parsonage. And there was about, taxes being paid because it was used as income.
yeah.
Like
Yeah. Property taxes. Well, that's where property taxes were coming in probably.
Yeah, there was a little description, so they asked us to move.
Okay.
Yeah, so.
I'm sorry?
We were told by the tax assessor that we can't rent our parsonage.
Well, you could, but it'd be taxable.
Yeah, it'd be taxable.
It'd be taxable. You would owe property taxes on it.
That was a headache.
Yeah. The last topic on page 19, what other types of taxes apply to churches? I guess we'll talk about three real quick. One would be property tax, but in Texas, the structures that are used for religious worship are not subject to tax. The stuff that's not used for religious worship is subject to tax. So the example I read was, you had the main campus, and then they bought some land down the street for a new campus later on. And there's some time limit, I don't remember if it's 2 or 3 years. If you're building on it within the next 2 or 3 years, they're going to give it to you, you're not going to pay tax on that. But if you're 10 years out, you're going to pay tax on that spot of land as if you were a for-profit business. So you got your property tax rules to be aware of.
So if you rent it out to parsonage, you pay property tax?
I believe that's true. Mhm.
That's what we found out.
I know Reeves County, but after the church
Yeah, you make some.
moved over, and they wanted him to start paying property tax, and they wanted us to leave. They didn't want that property tax.
Next is sales tax. You should be exempt from sales tax as long as you're buying items used for the ministry. And that's where sometimes you get into the argument with people about show us your 501c3. But that you don't have to fight that battle. You just give them a Texas exemption certificate, which doesn't make you prove that you're 501c3. You say that I'm a church, and it should be fine. So a Texas exemption certificate should take care of that. One last topic, and it was on here somewhere, was unemployment taxes. Churches do not have to pay unemployment tax on their church workers, but on daycare workers, I think they might. And so don't quote me that daycare workers don't. There seems like there's some special provision that daycare workers do have to pay unemployment on the daycare. But on your ministers and your church secretary, you're not paying state unemployment. Okay, so let's move on to page 21, accounting for contributions. And there's several things in here that to me are interesting and you need to know. What are the requirements for contribution receipts? Well, first of all, you're going to give out year-end contribution letters to your members. And you're required to if they go over $250 on a check. So let's say you've got a member and they give $200 per week on a check. You're not required to give them a letter, but I'm telling you it's good practice to give them a letter. But because each check was less than $250, you're technically not required to. I'm telling you it's good practice, you should give it to them. But if the person who gives $200 per week, 1 week writes a check for $260, you are now legally required to issue a receipt for that $260 check. You could do it right then, or you could just wait and put it on the year-end letter. Either one would be fine. About the third paragraph down on page 21, there's a sentence there that needs to be on your year-end contribution letters. It's in quotation marks, and it reads, "You do not receive any goods or services in connection with these contributions other than intangible religious benefits." Several years ago, the IRS made a big deal about this because a lot of people were writing really large checks to their private Christian school for their kids' tuition. You know, $10,000 checks to St. Mark's. Well, it was St. Mark's School, but they just put St. Mark's on the payee line, and they were deducting it as a charitable contribution. So IRS said, no, not going to do that. You pay more than $250, you get a receipt, and that receipt's going to tell us whether you got anything for it or not. Well, our members are giving to our church, and other than intangible religious benefits, they're not getting anything in exchange. They're not getting a child's education or anything like that. So the IRS came out and said, if your receipt doesn't have this wording on it, it is non-deductible. So you're like guilty until proven innocent. So I'm afraid that some churches have issued just normal year-end contribution receipts, but they don't have this wording on it. Those people get audited. The members get audited. Technically, they were not eligible to deduct their contributions. I haven't seen that come up yet, but it is out there and it could. So I'm just telling you, put that sentence. In our software, it's built in. I mean, it's already in there. So that way I don't forget it. I don't even have to remember it. I just hit print on my year-end statements, and that statement's already printed on there. Okay. And then obviously, I say you should not include this statement if it's not true. So, you know, if somebody bought a pie at the church auction for $30, you really shouldn't put that on the receipt, on their year-end letter, because they did get a pie for their $30. So you can't, that's not a true statement anymore. So just don't put that on their letter. Now, granted, the pie may have only been worth $10, and they should have been able to deduct the $20 difference. I guess you can issue them a separate receipt that says you gave $30 for the pie, and it was worth $10, so your contribution is $20, if you want to. How are non-cash, this is huge, how are non-cash contributions reported and valued? Oh, the key thing there, and valued. People give stuff to the church, right? People give a piano. You should give them a thank you letter saying thank you for your donation of the piano. It is a 1999 such and such model piano, and it's lovely, and we will use it for the Lord's glory. And you sign it, you date it, and there you go. Then they get it, and they say, but you didn't put a value on there. You could be cute and say, but I'm not a piano valuer. But the truth is, you're not required to put a value on there. You're a church, you're not a piano valuer. You don't know what the piano's worth, and it's not your problem. It's their problem. The donor has to figure out what their stuff is worth. So, you know, if it's over $5,000, they have to go get an appraisal. And if it's over $5,000, they will send a form to the church where you have to sign to attest that you actually did receive the piano. But you're not vouching for the $5,000 or the $10,000 or what. You're not vouching for any values. You're not an appraiser. So you just got to accept that. You're not an appraiser. Don't pretend to be an appraiser. Don't try to be an appraiser. It's not your job. You're not required to. Your only requirement is thank you for your donation of such and such. And just describe it. The couch, the piano, I mean, that could even go down to the groceries. If somebody brings in a bag of groceries every night for the Wednesday night meal, it really applies to that too. We know you bring a bag of groceries to the Wednesday night meal every night. Thank you so much for that ministry. Sign it, date it. If they're going to claim over $5,000 on their tax return, they're going to have to find somebody to appraise those groceries. If they claim less than $5,000, they're going to have their receipts. But none of that is your business. When people give non-cash items to the church, you give them a receipt describing what they gave, end of story. And whatever they do with that on their taxes is their problem, their issue. If they give a car, there are specific instructions about how to give a receipt for a car. You need to Google it. I mean, there is very, very specific instructions about how to receipt a car. Or a boat. It's anything with a VIN. A car, a boat, an RV, maybe a motorcycle. If it has a VIN, you've got to follow the car instructions about how to issue the receipt. Very, very, very specific. All right, now on page 22. How are gifts to individuals, specific individuals, reported? This is an area of great confusion. So the first thing I'm going to say is, a gift to an individual is non-tax deductible. I gave $50 to my daughter for Christmas. Well, maybe it's more than 50, but whatever. I don't get to deduct it. She doesn't declare it as income. Right? I mean, Grandma used to give me $5, and I never claimed that either. So, gifts between individual people is not a taxable issue. There's a 14,000 rule. We'll say that for a different day. It's not applicable for this seminar. Gifts between individuals, not a taxable issue. Even if the person's not related to me, it's still not a taxable issue. So my neighbor's house burns down, and I feel sorry for my neighbor. I know they're hurting and they're in need. So I go over to the fence. I say, neighbor, I'm sorry your house burnt down. Here's a $500 check. You know, this will help y'all get some groceries and some clothes and just help you for a day or so. And that's a wonderful thing to do. It's an honorable thing to do, and I think the Lord will honor that. But you get no tax deduction for it. Because a gift to an individual is not tax deductible. And then some people realize that and they say, okay, well, I want to do the right thing, Lord. I want to help my neighbor and everything. But I ain't going to get a tax deduction for it, so that stinks. So what I think I'm going to do, I'm going to run down to the church. I'm going to give the $500 to the church secretary, and I'm going to say, here's the deal. My neighbor Joe's house burned down. So I'm giving you this $500. You need to make a church check out and give him the $500. If you agree to that, I'll leave you my $500. Well, you do that, that's not tax deductible. Because a gift to an individual is not tax deductible, even if you funnel it through the church. In fact, that's probably shady. I mean, it just shouldn't be done. Just give him the $500 across the fence and don't get a tax deduction for it. The Lord will honor it, right? Because to be tax deductible, a gift to the church has to have control over it. And in my little scenario, remember I told the secretary, if you will agree to write the $500 check back out to my neighbor Joe, then I will leave you this check. If you do not agree to write the $500 check to my friend Joe, I am not going to leave you this check. Does the church have any control in that transaction? I have arranged all of this. There is no control of the church. It is non-tax deductible. Let's change the scenario a little bit. Joe's house burns down. I feel terrible about it. I go over and pray with him. I call the chairman of the benevolence committee, and I say, do you know my neighbor's house burned down? Oh, I didn't know that. It's terrible. We should do something. Well, yeah. So, at this Sunday at the church service, the chairman of the benevolence committee stands up and says, we're going to take up an offering for benevolence. There are benevolent needs in our community. There's a lot of benevolent needs in our community. Some people's house burned down. There's people out of work. There's people, with medical problems. And so we're taking up an offering this morning for the benevolent fund. We hope to raise lots of money because y'all know there's people in need out there. There's that one guy's house burned down. We're taking up an offering for the benevolence fund. Then the benevolence committee will meet and we will distribute those funds to the people in need. That is a tax deductible gift. I'm giving to the church. It's going to be under the control of the church's leadership. The benevolence committee is going to meet and make decisions about who gets the money. That is tax deductible. The committee meets and says, boy, the guy's house burned down, let's give him all the money. Perfectly fine. Right? They can help anybody they think needs help. So there's a way to do it, to make it legal, but it is not where I control it. The church has to be in control. The benevolence committee meets and says, man, we raised $5,000 today. Let's give $4,000 of it to the guy whose house burned down, and this other $1,000 to the lady whose car broke down. That's the church's prerogative, right? It's their, they can make that decision. It's under their control, and that's what made the contribution tax deductible. So a gift to an individual, non-tax deductible. A gift to an individual that I finagled the church to get it back over there, non-tax deductible. A gift to the church where they decide where it goes is tax deductible. Now, what do you say, well, what if I give to the hymnal fund? You know, we want new hymnals, so I want to give $100 to the hymnal fund. Is that tax deductible? And the answer is yes, because it's not a gift to an individual, it's a gift to the church. And when the church is good and ready, they'll buy the hymnals they want to buy. So that is under the control of the church. So gifts to a project at the church are tax deductible, but not a gift to an individual, even if I finagle it and run it right through the church. A different scenario, though, is missionaries. So the missionary comes, we take up an offering, that is tax deductible, because the church is going to give the missionary a 1099, and the missionary is going to pay tax on it. Just like my weekly tithe is tax deductible, even though I know a portion of it goes to the pastor, but I get to deduct it, and the pastor is going to pay tax on his income. So a gift to a missionary is going to be tax deductible if it goes through the church, because the missionary is going to get a 1099 and pay tax on it that way. Does that part make sense? All right. Top of page 23. This is a good question. Can the church issue a receipt for donated labor? And the answer is no. And I get this question quite a bit. You know, the plumber came to the church and did work for free. So shouldn't we give him a receipt? A thank you letter would be fine. A pat on the back would be good. But a receipt, no. Now, if the plumber says, you know what, I spent $100 on materials, but I don't even want to get paid for that. I want to donate this $100 of materials to the church. Then you could issue a receipt letter that says, dear plumber, thank you for the gift of the materials that you used at our church on this date. I saw that you brought in several feet of pipe and you brought in some fixtures, and we're so grateful for that. Bless you. Date, sign it. Because that's a non-cash contribution. It's like donating groceries or donating a piano. He donated materials. His labor, other than the pat on the back and the thank you, there's nothing to it. People don't get to deduct the cost of their labor. I teach Sunday school. If I got to deduct the cost of my time for teaching Sunday school, I probably wouldn't pay much tax, you know? So there's just no deduction for labor, for donated labor. No, doesn't matter if it's inside their profession, outside, there is no deduction for labor ever. Volunteers can deduct their church-related expenses, though. Because I am a Sunday school teacher and a deacon, I do go visit some people from time to time. So on my personal tax return, I can write off my mileage for performing my volunteer duties. I'm a deacon. You need to go see Aunt Susie or Sister Susie in the hospital. Okay, that was a 50-mile round trip. I can put those 50 miles on my personal tax return on Schedule A as an itemized deduction. We're on page 24. Financial reporting, audits, and internal controls. Here's what I'm going to say about that. I had churches call me and said, Jerry, should we get an audit? And you're not going to believe me, but my answer is normally no. Because an audit's not what you think it is. A lot of people think if we get an audit, we'll have 100% assurance that nobody's stealing money. And that's just terribly not the case. An audit, if you hire a CPA firm to come in and do an audit, they'll take a high-level look at your financial statements to make sure your financial statements are free of material misstatement. Material misstatement may mean that they're within $20,000 of being accurate. In other words, somebody could have stolen $19,000. They're still materially accurate. And the auditors will say, they look good to me. Nobody stole more than 20. And you're like, oh, somebody stole 19? Well, I don't know if they did or not. You didn't check for that? No, I didn't, because that's not the purpose of an audit. So an audit's not what you think it is. It's not going to guarantee that nobody's stealing money. That's probably what people thought it was and probably why they wanted an audit. If you're really worried about that, what you can do is you can hire a CPA firm to come in and do specific procedures. Here's what you would need to say. We think that not all the money that's coming into the plate is making it to the bank. So could you do some procedures that maybe check up on that one little thing? And the answer is, yeah, I can design some procedures to check on that one little area. It won't be a full-blown audit. It won't even be called an audit. It's called agreed upon procedures. When I'm done, I'll tell you what the results of those procedures were. You can get some comfort over that. But if you just go out and pay $10,000 to have a CPA firm do an audit, you're going to read the letter when you get done and you say, that's not what we thought we were getting. And it's not the CPA's fault because he's doing exactly what an audit's required to do. It's just you didn't need an audit in the first place. If you're worried about people stealing stuff, either get a committee together of church members and have them do the procedures to double check stuff, or hire an outside person to come in and check a specific area that you think is a problem area. But unless you have a bank note and a banker that requires you to have audited financials, I would not pay the money for an audit. They're super expensive. And they're not what you think they are anyway. Then we get to fund accounting, and that is where, people give. And if they give to a specific project, you're obligated to track the money for that project. So if I give to the hymnal fund and you cash my check, you better only spend it on hymnals. Because if I give to the hymnal fund and you spend it on volleyballs for the youth group, you have violated our contract. When I said, this is for the hymnal fund, I expect you to spend it on hymnals. You spend it on something else, you have violated our contract. In theory, I could sue you to get my money back. Violation of contract. So you have to keep track of designated money. And so you need an accounting system that does that. There are several accounting packages out there. I know a lot of churches try to use QuickBooks. I live and breathe QuickBooks. We use QuickBooks every day in our business. I love QuickBooks. Probably the best software package ever created is QuickBooks. Except it just doesn't work for churches. Because keeping track of those funds inside QuickBooks is very difficult to do. Not impossible, but almost. Because we tried to do it for quite some time. It's just, there's a couple of different methods. In fact, the last section of my booklet back here is how to use QuickBooks to do church accounting. So I give you the outline of how to do it. I'm just telling you from personal experience. The opportunity to create a mistake and be difficult to find the mistake, you can spend a lot of time. Whereas if you buy a specific fund accounting package, it's going to get a lot easier. And you have a legal duty to keep track of those funds. You don't need 9 checkbooks to do it. You can do it with a piece of software. You do need good internal controls. So I said you don't need an audit, but you do need good internal controls, and that is something, for example, 2 people should count the money on Sunday morning. Because if only one person's counting the money, how do we know $100 is not going to the pocket of that person? Here, I'll go a step further. So 2 people count the money, and they write down that today there was $2,500 here. That sounds like a good control, and it is. Then you leave the bag for the secretary, who comes in on Monday. Secretary takes the bag to the bank, makes the deposit, comes back, puts it in the computer. The secretary issues the financial report at the end of the month. Do we have any controls to make sure the secretary didn't steal $100 on the way to the bank? In my little illustration there, we don't. And what would stop the secretary from taking $100 out of the bag, putting it in his or her pocket? Nobody would be none the wiser. So what we do at our church, when the yellow slip, the copy of the deposit slip comes back from the church, one of the counters from last week matches the yellow slip to the sheet. So the signed sheet says there was $2,500. The validated deposit slip from the bank coming back better show $2,500 or somebody stole some money in the middle. Just that one little thing makes sure that all the money that was counted actually made it to the bank. And it's super easy. Takes about 5 seconds. They take the yellow deposit. Ooh, the teller at the bank validated that there was $2,500. The count sheet from last week says $2,500. Check mark, no money's been lost this week. So just some little things you can do. And then 2, I want to demo for you our membership program. Earlier I demoed the accounting program, and then I want to demo the membership, and then we'll be ready for lunch.
Can I ask one question on
Yes.
the designated
Yes.
funds?
Mhm.
I've been in churches where that fund's been there 20 years, got $13 in it.
Yeah.
And the church made the says, you know, we're going to move that 13 to another designated fund, is that actually proper? I mean, you-
Yeah, it may not be proper, but it might be. So I know what you're talking about. We kind of got one of those right now too. Here's what I would say. I'd say try to find a way to spend the money. So ours is the playground fund. You know, we got like $300 left in the playground fund. We built the playground 8 years ago for $2,500, but there was $300 too much. Now we got $300 left in the playground fund. We need, option one, best option to me is buy a new slide. You know, just spend the money on the playground and everything's gonna be great. Because technically speaking, if we just slide that over into the general fund, technically speaking, somebody who gave to the playground fund 9 years ago could come back and say, I gave $300 to the playground fund and y'all didn't spend it on playground, y'all put it in the general fund. And, you know, are they really gonna sue us for breach of contract? Probably not, but it's an opportunity for somebody to gripe about something, and we probably got too many of those anyway, you know, so. I would say try to find a way to spend it in the area. Or if you know somebody who actually gave 300, maybe it was you. You're like, well, I gave 300 and I don't care if my 300 gets moved over. Then you could do that, you know, and write a letter saying, I know there's 300 left in the playground fund, but it just so happens that I gave 300 and I don't care if my 300 gets moved over to the parking lot fund. That's fine. That would be another way around it. But if you just slide it over without getting the donor's permission or spending it where it was approved, you could be subject to criticism.
So on the, back to volunteers and conduct your church-related volunteer expenses.
Yes.
An example I have, me and my wife, through our church, collected canned goods, stuff like that. We went through 3 different cycles of this, and we took them to Louisiana.
Huh?
So we can deduct our travel expenses and all that stuff.
Schedule A, volunteer expenses, yes, sir. If it goes over $500, and probably with mileage and all that stuff included, it probably did, you know, maybe hotels and even stuff like that. You need a receipt or a letter from the church that acknowledges that you went.
Okay.
You know, thank you for your trip to Louisiana to do that mission work that we encouraged you and wanted you to do. We know you incurred expenses. We don't know exactly what they were, that's irrelevant. But we know you incurred expenses. Thank you for performing that duty.
And we're not asking for reimbursement, we just, if we can deduct it off our taxes, that would be.
That's exactly right. Schedule A, itemized deduction, volunteer expenses, yes, sir.
Okay.
Any other questions? All right, can I demo our membership program for you? You know, each module is $99. And if you buy both of them at the same time, it's $179. And once you buy the software, you can use it for life. But most of our customers will, for $49 per year, sign up for another year's worth of support and updates.
Now, is this web-based, or do you have to keep everything on?
Yeah, it is not web-based, it is PC-based, but you can put the data on a centralized server so that multiple users in the church can access the same data file. And we don't charge anything extra for that. So let's say you have 3 computers in the church, you can load the software on all 3 computers, keep the data on just one of them, and tell the other 2 computers to find their data on the centralized computer, and all 3 users can be working on the same data file. We are working on a web-based version, and maybe later this year we'll get that released. I've found that it's harder than I thought it was going to be. All right, so we start off with, you set up households, families. So in our example here, we've got the Alexander Abbott family. And of course, you put in their address, their phone number, you know, all their contact information. You can do these user-defined dates, the date they joined, the date they moved away. And if you want to load in pictures of them, you can, so that you can print a pictorial directory later on. We even have a little fancy thing over on the side for the people who have snow bunnies in their church, where they, snowbirds, I guess that's what it's called, where they moved to Florida for winter. So you can have an alternate address, so that your church members that are there in the summer, this is their summer address, but when you mail their year-end contribution letter, you needed to go to their, winter address. So you set up your households, which is your families, then you set up your members underneath the family. So this is the Alexander Abbott family, and the members are Alexander and Annie. And then when you click on members, you can put in the weekly basis, then, you're gonna need to enter your contributions, and I'll show you how easy that is. Again, this projector is making me scroll from side to side. On a regular computer, you do not have to scroll from side to side. So for contributions, it's this easy. You put in your date, you pick your member, the payment type, check, cash, whichever. Let's say it is a check, so I'll put in my check number. And then again, I'm going to do a little side to side scrolling because of the projector. So let's say that Bill Boyd gave $100 this week to the general offering, and then gave $10 to the building fund. So that's all you have to do. You split their contribution between two different funds. And when you're done entering all your contributions for this week, you'll put them on a deposit. And then that deposit can be imported over to the accounting program. The accounting program is going to know how much money went into each fund. So you just select all the people who gave this week. So our total contributions this week are $755. We can print reports, deposit slip and fund report, or like I say, we can import that deposit over into the accounting program. Then at the end of the year, of course, we're going to want to print our contribution letter. Get the date range right. Unless otherwise stated, you do not receive anything in exchange for your contributions other than tangible goods and benefits. So in addition to the contribution letters, you can print pictorial directories, a couple of different formats. Pretty cool. And like I say, you can print mailing labels for just specific groups. We also allow you to track attendance. So like if you want to track your Sunday school attendance in here, you can print a roster for each Sunday school class, and then go in and mark who was there. And then you can give a report to the Sunday school teacher showing who hasn't been there in so many weeks. So if they want to do follow-ups like that. And then also for pledges. I know most Baptist churches don't do pledges, but there are some types of churches that do. So, again, we've been using this at my church for several years, and it takes me just a few minutes to enter our contributions, put them on the deposit slip, put the deposit over into the accounting program, and then at the end of the year to print my year-end contribution reports took me about 5 minutes. Anybody have any questions about that?
I was on my block base, our office uses that for a couple of churches, we take care of the bookkeeping and the contribution, and for the first year, used it. And it was very nice in the year to go click the print button, and it printed all of them, I just mailed them all to the church.
Right.
Yeah.
And you get labels too, so when you print your letters, then right below is a button that says print labels, so it prints labels so you can put on the envelopes and mail the letters with. And we try to make it pretty turnkey and easy for you. All right. One other note, there's a book out there called the Zondervan Church and Tax and Financial Guide. And it has basically the same information that I have, but just more detail. Or if you think I'm crazy, which is always a possibility, you could check me out by reading the Zondervan Church and Tax and Financial Guide. You can get it on Amazon for like $16. And it's written by Dan Busby. He's a CPA who's the president of the ECFA, the Evangelical Council for Financial Accountability. So it's a great book. It's where I learned most of my information about church taxation over the last 20 years. So I encourage you to get a copy of that book and keep it in the church office. Because again, somebody's going to look at this and say, well, that's good information, but who's Jerry Walker? But you get that book from Dan Busby, and it says the same thing. You're like, well, I'm not sure I want to argue with Dan Busby, so I think it's probably right. Okay. If you don't have any other questions, I sure appreciate your attention, and I've enjoyed being with you today. Thank you.